Right, good morning everybody. This is your second video. I want to share with you something, how I look at the market. Sometimes I will use this to have a longer term view and expectancy of the stock market, and then I can go into currencies with what I'm expecting, oil, gold, all those Japanese yen futures, etc. Quickly, disclaimer again, trading forex and equity markets have a level of risk. This is not a signal or recommendation service. This video is for educational purposes, and seek financial advice before you're looking for investment opportunities. If you want to have a place or a chart where you can overlay charts, please go to tradingview.com. This is the charting software that I use many times to overlay charts, and you can see here that I have overlaid oil with the US stock market. So what has that to do with each other? What is going on with this chart? Why in the world would you do that? Well, I'm suggesting that the oil is an inflation indicator, and usually it is positively correlated, and if the oil prices come down, the S&P 500 also will follow. I want to go down to a weekly time frame and zoom into a little bit. I want to explain to you that many times when oil is dropping aggressively like this, the stock market follows. Or if the oil comes down aggressively, it can still mean just a sideways market or a correction in a bullish market. And if oil or inflation goes higher again, then obviously the stock market will go higher again. We can see here these highs. When oil comes down aggressively, that means S&P 500 coming down. If they find bottoms and oil moves up again, then the S&P 500 moves up as well. I do believe that there's a big correlation between oil and inflation and the stock market. It makes sense. Something interesting is happening here. I'm looking on short opportunities on oil, and I'm looking for the stock market to have at least a pullback or a sideways consolidation and just cool off a little bit. I do believe the S&P 500 is still in a bullish market. It is not a reason to sell, not at all, but I am giving, it is giving us signals of caution here that it can have a pullback either, or it can just go sideways for a bit. The reason for that being, we can see this is normal. S&P 500 and oil moves down together. This is normal. Oil is moving higher, and the S&P 500 is moving higher, lows there, everything is correlated, and something happens here. Oil does not take out the highs, it is basically sideways, and the S&P 500 is not staying sideways. After this low, the market just basically turned around aggressively at those highs, and the S&P 500 continued higher. That shows me at this point that this is an overheated market, that the market is due for a pullback, and as I am looking for oil to move lower to these levels, actually, I do believe that this market is going to go sideways, maybe to this past resistance future support, and from there, when oil goes up again, I believe the S&P 500 will just continue higher. This means deflation. We can look at deflation, we can look at short opportunities on gold as now. If deflation comes in, it is because of oil, and it is also very negative for gold to go into a deflationary environment is very bad for gold. I do see the wave count for gold going down to $1,000 at least. So it's something to look at if you're bullish on stocks. Maybe just a little bit of a time to relook at your positions. Maybe get out some, maybe half of the positions later, wait for the pullback and to get into a later stage. Cannot tell you what to do, but this is what I'm seeing on the chart. What I want to do now is just maybe put on some other indices to see what they are doing. So I'm not looking at the US indices and the oil prices at this stage. I'm comparing all of the world indices, the DAX, the S&P 500, I will do the Nikkei and the FTSE as well. I will just put it in here, just see what they are doing. I believe 100% that that before a major turn, there will be bullish or bearish divergence between these indices. And here I can see as well, very interesting, you must train your eyes to see this on a chart, is that the red one here is the Nikkei, is basically at those highs. The S&P 500 passed that already, so that is already divergence. This market here already passed the highs, but not as much as the S&P 500, and the FTSE here also at those highs. So I can see, even if in relation to these highs, that the S&P 500 is far above all of the indices, and that is why I am looking for the US stock market to have a little bit of a correction. All of these must line up again before the next move will come. The last thing that I want to look at, if I've now compared it and look at the divergence between all of the indices, I want to compare the US stock market or the S&P 500 with the 4 other major US indices, or the 3 others. I believe it's the Nasdaq, the Dow Jones, and I'm also going to compare it with the Russell 2000. What is the Russell 2000? Smaller caps. So in a deflationary environment or in economic slowdown, I do believe that the weaker or the smaller companies will feel the cash flow first, that the Russell 2000 will decline first, and that is an indicator that can show us before the market turns that the small companies are struggling, and that usually is an indication of what is going to happen on the bigger time frame of things. I want to give you an example. Remember, this light blue line is the S&P or the Russell 2000. Here is a very good example. I want you to concentrate on this, and I want you to know this. It's difficult to see on this chart. I'm just zooming in. Right, this is maybe the best one. Right. So this one is the Russell 2000, the blue. Can you see that after this high, it does not make a new high? The Russell 2000 comes down. Let's do it in a red line. Russell 2000 goes lower while these others are going higher. Dow Jones going higher. Nasdaq is going higher. S&P 500 is higher. But the smaller companies are struggling. There is divergence between the Russell 2000 and the other indices. And look what happens after the divergence, after the Russell 2000 failed to make a higher high. It is an aggressive correction. Let's look what is happening currently at the moment. Do we have divergence? My. After these highs in December, Russell 2000 has not even break the highs. This broke the highs, this broke the highs, this broke the highs. It shows divergence. It means that the smaller companies cannot keep updated or with the bigger companies. They have obviously the cash flow. They are still pouring in or getting money in. People are investing there. But the small companies are struggling. I do believe a correction is on the way. I cannot see when. Cannot see exactly the same when it will happen. I believe it's going to happen either in January or February. The signals are there, the signs are there, and if this is going to happen, we're going to run to Japanese yen futures and we're going to trade the dollar yen, and we're going to see what is happening there. Right guys, this is your video, how I use divergence between many indices across the world, how I use divergence with the US stock markets, 4 of them, and how I use divergence between oil and the S&P 500. Another nice video for you. Keep well, everybody. Bye-bye.